Porsche's CEO Oliver Blume is on his way out after 9 years at the helm. Why? Because the numbers are brutal. Operating profit collapsed by a staggering 90% in the second quarter of 2025. When compared to 2024, margins have shrunk from 18% to just 6.5%, and China sales have crashed by 42%. Today, we're breaking down the data that forced this move and what it means for the future of both Porsche and Volkswagen. If you're new here, welcome to Carfax, your go-to for automotive analysis. Like, subscribe, and let's dive in. Oliver Blume took over Porsche in 2015. Under his leadership, sales grew from around 225,000 to over 320,000 cars by 2023. Revenue soared past 40 billion euros, and operating margins consistently topped 15% or more, making Porsche the industry benchmark. But things changed in 2022. When he was also tapped as Volkswagen Group CEO, Blume was suddenly responsible for 10 million vehicles across 10-plus brands, generating over 300 billion euros annually. Running the world's second-largest automaker and its most profitable luxury brand, even insiders said it couldn't last. The backlash was instant. Volkswagen's labor chief, Daniela Cavallo, warned that 670,000 employees couldn't afford a part-time boss. Porsche, now with a 90 billion euro market cap, bigger than Mercedes-Benz, had investors demanding a full-time CEO to protect their stakes. And the numbers started to scream trouble. In the first half of 2025, Porsche's China sales dropped 42% as EV competition bit hard. Tariffs in the U.S. didn't help either, and Q2 operating profit nosedived 90% year-on-year, slashing margins from industry-leading highs to just 6.5%. For a brand built on financial performance, this was a wake-up call. The brand is caught in the middle. The 911 is still the icon, over 50,000 units a year, but survival depends on electrification. The Taycan, their first electric, sold around 40,000 in 2023, but demand is slipping as Chinese rivals undercut it on price and range. They completely abandoned its EV strategy and now are promising gas-powered cars well into the 2030s, a complete shift from the 80% of sales coming from electrics Blume was promising not a long time ago. Cars that were supposed to be electric only, such as the Macan and the new 718, will have a petrol version after all. Investors expected the next Ferrari, high margins, exclusivity, and bulletproof profits. Instead, it looks like a Volkswagen subsidiary, stuck with group decisions and losing its edge on tech and software. If you want to learn more about the never-ending crises at Porsche, we have a very detailed video covering it. Just click on the card appearing on your screen. By August 2025, Porsche's board launched a formal CEO search. Top picks include CFO Lutz Meschke and other executives from the Volkswagen Group. Outside names are being considered as well. Whoever wins faces a brutal to-do list. Revive China sales, navigate rising U.S. tariffs, and fend off rivals from Tesla to BYD's new luxury brand. The brand delivered 146,000 cars in the first half of 2025. That's a 6% decline compared to the first half of 2024. For Volkswagen, this is about survival. Europe's biggest automaker is losing the EV race. Market share dropped below 20% in 2024, while Tesla and BYD surged. Volkswagen's software arm keeps racking up billion-euro overruns and delays, hurting launches for Audi and Porsche. Now, with Blume focused solely on Volkswagen, investors hope for a turnaround, closing the profit gap and finally getting EVs and software back on track. A dedicated CEO could be transformative. New leadership could push the brand upmarket, chasing Ferrari-like margins, or double down on digital subscriptions and next-gen EVs. But remember, Porsche still relies on Volkswagen's EV platforms. Breaking away would be risky and expensive, so independence has limits. Blume's exit ends the two-hat experiment. The data is clear. Porsche's profits are plunging, sales are down, and Volkswagen's EV strategy is falling behind. For Volkswagen, this is a shot at sharper focus. For Porsche, it's a chance to finally define itself as a true luxury powerhouse. But the next CEO faces a monster challenge. Defend the 911, maintain 17 billion euros in profits, and prove Porsche can thrive in a software-driven, electrified world. So what's next? Should Porsche go ultra-exclusive like Ferrari or chase EV volume? Drop your take in the comments and don't forget to like and subscribe for more no-nonsense car industry deep dives. Thanks for watching. Catch you on the next one.